some investment stories sound more like legends than factual accounts of people making fortunes overnight and seeing their goals come true. However, these are not just any stories. They represent a path of risk conviction and unflinching belief. Meet Jason DeBolt, a guy who peered beyond the present into a future that many could not have imagined and who transformed the ordinary into the remarkable. Like I mentioned, every transaction was a little frightening and they only got scarier and scarier. For example, I think I remember buying, even though Tesla was doubling its price from $30 to $80. I remember thinking, maybe I shouldn't be doing this because Tesla had just doubled to $8,850. Today, I'm going from $30 to $80 back then. That's not split adjusted. So that's like going from $7 to $15, right? That seemed high risk. I mean, buying Tesla after a double seemed like really risky at the time. But look, I mean, Tesla's 100 since that time. So, in the long run, really doesn't matter. This is why you shouldn't really buy. I don't believe in buying on the dips because if you have a long-term vision, if you're a long-term buy and hold investor, it just doesn't make sense to try to time anything. I don't try to time anything like my 401k when I rolled that into Tesla. I think I placed like $400,000 market order. I didn't dollar cost average. I just sold off everything and bought it all in one go. Now that 401k is worth $5 million. So I mean, if I dollar cost averages, I maybe could have done a little bit better, but also could have missed out on some upside. I would wait until I had like 10 to 20k saved, and then I would just buy all the SGA. My conviction definitely grew as I start see how Tesla was continuing to innovate. It was continuing to be misunderstood by not only the public in Wall Street, but by even people at Google, like super smart technical people at Google. Some of them didn't even understand it until I actually got them physically in my car and told them to drive it. And when you see somebody change, like, I think having people test drive my Tesla was like one of the few times in my life where I actually saw people change, like, their mindset. Like, literally, you see the change, and hey, this is Tesla Insights, and today I'm going to take you through a tale that seems like fiction, but is as real as it gets. It's about how one man's daring investment in Tesla changed his life forever. We'll uncover the 5 things you must do to retire like me based on Jason's astonishing strategy. From living in his car to making millions, his story is not just about making money. It's about a vision, a gamble that paid off in ways most can only dream of. But remember, every investment story has dangers and benefits. Are you prepared to embark on this financial adventure? Could this be your roadmap to retirement or a cautionary tale of risk and reward? Let's find out together as we delve deeply into the highs and lows, strategies, sacrifices, and ultimate rewards of a man who bet it all on one stock. Don't forget to like this video. And before we get started, let's take a moment to quickly review the events that have occurred in Jason's crazy life. Our story starts in the early 2010s, when electric cars were still relatively unknown. Enter Jason DeBolt, a regular guy with extraordinary vision. Then Jason, just another person in the crowd with a regular 9-to-5 job, staggered upon a business that would transform his existence. In 2013, Tesla, enthralled with Elon Musk's vision, saw beyond automobiles and into the future, armed only with faith and his life savings. Jason took a risk and made a large investment in Tesla at a price of just $2.50 a share. Many would have been afraid to take such a risk, but this isn't simply a tale of luck. It's also a story of unwavering conviction. As Tesla's stock rose, so did Jason's fortune. This is just the beginning of this incredible story, friends. Let's delve deeper into the hows and whys, the risks and strategies, and see what lessons we can learn from Jason DeBolt's remarkable journey. The once unthinkable happened. Jason retired at 39, a millionaire, thanks to his Allen Tesla portfolio worth $12 billion. Jason held on to his shares through ups, downs, never selling, and always believing his journey wasn't without sacrifice. At one point, Jason even lived out of his Tesla Model 3 to save and reinvest in more shares. His dedication was unmatched. Thus, how precisely did Jason DeBolt transform his childhood goal into a multi-million-dollar enterprise? It all began with a highly profitable approach that he adopted, investing heavily in stocks that he strongly believed in. First and foremost, Jason personified the strategy of making bold investments in stocks that have strong convictions. Let's examine that. Finding a company that you not only believe in, but also see as having enormous growth potential is the strategy here. Jason's unwavering commitment to Tesla was rooted in his deep belief in the company's vision and potential. He realized early on that Tesla wasn't just about cars. It was about revolutionizing transportation and energy. This wasn't just any stock for Jason. It was a vision he believed in, one he saw as the future. It's about doing your research, learning about the sector, and genuinely believing in the leadership and long-term goal of the company. But here's the important thing. This strategy is dangerous by nature. Putting a significant amount of your money into one stock increases the possibility of both gains and losses. Diversification is generally advised in investing because it spreads risk, but high-conviction investing goes against this grain by placing a large wager on a single horse. It requires not only belief in the company, but also the guts to stick with it through market ups and downs, and the financial resilience to withstand potential losses. While it worked for Jason with Tesla, it's important to remember that such success stories are rare. Secondly, take a long-term buy and hold approach. After exploring the high-risk realm of making large investments in a single stock, let's move on to another essential component of Jason Dial's approach that was vital in his financial success. Our next important tactic is that Jason adopted a long-term buy and hold mindset throughout his investing journey. Jason's journey was not only about where he placed his bet, but also about how he nursed it. Jason showed incredible fortitude by hanging on to his Tesla shares and weathering the waves of market turbulence. For Jason, life was a marathon, not a sprint, and he wasn't interested in making quick money or timing the market. Adopting a long-term buy and hold strategy entails believing in the future of your investment despite the unavoidable ups and downs. This strategy calls for looking past the immediate noise and concentrating on the potential state of the business years from now. Perseverance and a firm conviction in your investment option history has repeatedly shown us that markets tend to rebound, so it's not just about hanging on during the good times. It's also about having the fortitude to endure when the stock drops or the market seems to be working against you. Innovative products and services can help companies with strong fundamentals recover and grow even stronger over time. It's critical to realize that there are dangers involved, as market conditions might shift and not all long-term investments grow or recover. So this technique calls for both an emotional attachment to an investment and a logical assessment of its possibilities going forward. Use margin with caution now that we are aware of the need of a consistent long-term approach. We are going to explore a crucial aspect of Jason Dial's investing method that increases both possible profits and risks. Our third major tactic is using finance to increase the power of our investments. Here is where we discuss using margin carefully. For Jason, margin trading was a big part of his investment. To put it simply, playbook margin gives investors the ability to borrow funds to purchase stocks, giving them the opportunity to purchase more shares than they could with cash alone. Jason used this tool to increase his investment in Tesla by using margin to increase his shareholding exponentially, which greatly multiplied his returns as the stock price of Tesla skyrocketed. However, it's important to understand that margin trading is a two-edged sword. While it can significantly increase your investment capacity, it also increases the risk if the stock price drops. Be ready to make a lot of sacrifices, yet this tale raises some important issue. Would you be brave enough to put so much money into one company? Could you take on the dangers as Jason did? How far would you go to make sacrifices in order to maybe succeed financially? Please share your thoughts in the comment section below. Would you invest differently or in the same way as Jason? If you found this story interesting, please hit the like button. Your support is greatly appreciated at Tesla Insights. Also, please make sure to subscribe and enable notification. Thank you for watching, and until the next time, stay motivated and prepared for success.